Hello. Today is Saturday, July 8th, 2023, and I'm Jason Shapiro with crowdedmarketreport.com. Today I wanted to speak about something that I know I've touched on quite a few times in other videos, but I wanted to sort of put it all into one place because I've kind of been ranting on this a lot this last week or so. And this is the idea of you don't know anything, okay, when it comes to what the market is going to do. And I say this because I know that I don't know anything for what the market is going to do. And the reason that we don't know anything, in my view, is really, well, it's twofold. It's because the market over time is random. So you're thinking that you know a random process, and it's silly. And the reason that it's random, of course, is because it's a discounting mechanism, which means that all known information is already priced into the market because you've got millions and millions of people with all different views on the information, and that all comes together at what we know as price. So to think that you're going to get an edge in trying to predict um, is just silly. People can't see the future over time, and the danger here is like that. You come out and say, okay, I think that the employment report is going to be stronger than expected, and therefore interest rates are going to go higher, and therefore the stock market's going to go down. And there's a number of issues here. One, I think the employment report is going to come out stronger than expected. And then it does. Oh, I knew it. Well, clearly the employment report is either going to come out stronger than expected or it's going to come out weaker than expected. And just because you guessed right doesn't mean that you knew it, okay, that you knew the future, right? And then problem number two with that is if you get it right, now all of a sudden you're putting it in your head. Hey, I knew it. I'm so smart. I know I can see the future. So therefore, I'm going to make bets on my ability to see the future. It's a bad habit to get into because I can promise you cannot see the future. And you're not going to see the future better than all these other people combined. It's just not possible over time. And of course, we have, I think, an even bigger problem with this is that, okay, the employment report is going to come out stronger than expected. Therefore, interest rates are going to go up. Therefore, the stock market is going to go down. Well, now you've got the next level of problem, which is that that's not necessarily true, okay? Because the market does all kinds of things that are unexpected all the time. So maybe the employment report comes out stronger than expected. And maybe interest rates do go up. But you know what? Maybe the stock market goes up anyway. We've seen that this whole year, right? The stock market this year has been going up on stronger than expected data, despite what people keep saying is going to be the Fed, shutting everything down by raising interest rates and all that. So you've got two problems there, both of which are going to hurt you over time, in my view. And just to give an example of this here. All right, ready? This is a coin. All right. And I'm going to flip it. And I'm going to say it's going to be heads. Heads it is. Look at me. I'm the greatest predictor of coin flips ever. And just for the record, it took me 3 times to get that right. But here we go. I called heads. It was heads. So now I must be a great predictor of coin flips. So I should bet on coin flips all the time. You can see the ridiculousness in that logic. And I'm telling you, it's the same thing towards predicting the future on the markets, right? Because it's random, just like the coin flip is random. And once in a while, you're going to get it right. And that doesn't mean anything. So the point here is that if, in fact, our ability to predict the future over time is useless, then how are we going to make money in the markets over time? And just as an aside, I think that what this comes down to is people's need. There's this deep psychological need that we all have to be right. Okay, we love to be right, whether we're arguing with friends or our family or whoever. We love to be proven right. It's an ego thing, and this drives human psychology. And I think the important thing to understand is, in order to make money in the market over time, we have to unlearn all the things, both logically and psychologically, that we have learned up until this point in life, which is a hard thing to do. But that makes sense because you know what? Making money over time as a trader is also a hard thing to do. So therefore, we have to do hard things in order to accomplish this difficult task. How do we do it? And my belief is that what we're trying to do here, since we're not trying to predict the future, right, is we're really trying to get into situations where when we have it wrong, we lose a little bit. And when we have it right, we make a lot, right? That's really it, right? Be wrong, lose a little, be right, make a lot over time, make money over time, which is the goal here. So, how to do that, in my view, is to try to determine what consensus is and look to be fading consensus. Because when you have consensus, if the consensus ends up being right, maybe they'll make a small amount of money because that consensus is already discounted in the market. So they're not going to make very much money there. Whereas if consensus is wrong, they are going to lose a lot of money. So let's do the opposite. Let's get into situations where we're going to lose a little bit of money and make a lot of money. And the way to do that is to be opposite the consensus. So rather than spending your time trying to figure out what the future is going to bring, spend your time trying to figure out what the market is discounting in the future is going to bring. What is the consensus so that we can get into that opposite type of trade? I'll say that I've said it a million times, my trades are wrong more often than they're right, but I make a lot more on the trades that I'm right on than the trades that I'm wrong on. And that's how I make money over time. And it's funny because I'll get a trade that works and somebody will say to me, oh, that was a great call. And the truth is, it wasn't a great call. It wasn't a call at all. It's not a call, okay? It's just putting myself in a position of this sort of anti-consensus risk reward. And of course, as I've spoken about a lot, there's another level to doing an even better job with that, rather than just fading consensus wholesale, is waiting for the market to confirm when that consensus is wrong. And I've talked about that a lot, about news failure on other videos and all that. And I think that's an important way to help with your risk reward of individual trades. But the idea remains the same, right? Get against the consensus so that your payoff is a lot more than your loss over time. And therefore, you don't have to be right all the time or even half the time, right? In my case, I'm right somewhere between 35 and, well, I'm not going to say I'm right. My trades work between 35 and 40% of the time. And that pays me off over time quite well. So that's the general idea. Stop trying to predict the future because you can't do it, okay? For the reasons I've spoken about, and start trying to find ways to get into trades that offer favorable return to risk over time. And the way to do that is to fade the consensus, since the consensus has unfavorable risk reward over time. It's pretty much that simple conceptually. So anyway, I hope that this makes sense. Always happy to hear questions and comments. And hope to see you on crowdedmarketreport.com, where we talk a lot about this type of stuff. All right. Thank you. And I hope everyone has a profitable week.